Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. What exactly happened to Nvidia stock? What competition? Which chip stocks are worth buying? What the F just happened? First, we have Tesla doing the unthinkable, losing 150 support level. Before we know it, Nvidia just crashed 10% in one day. Why is this happening? How? We haven't even reached analyst $1,000 target yet. I knew today would show up sooner or later. In my previous video, I already explained that from April to June, we will have liquidity black hole events, which means the Fed's liquidity that kept this market floating higher is being drained from time to time. Because Janet from the US Treasury needs to borrow more money to spend. So they issue more T-bills or T-bonds. That makes bond yield go up and that suppresses liquidity too. So in this video, I will explain why AI stocks are selling off, why it is a buying opportunity for us investors. I will compare 8 chip stocks using a free website, which I will let you know. It's not Jeremy's 1000X stocks, but it's free. Let me know what you think. I will let you know why I want to own at least 3 of them and my target buy price. Once known mostly for building PC add-on graphic cards for gamers, Nvidia has transformed its GPUs into the beating heart of the AI revolution, powering the creation of large language models and running the inference software that leverages them into the data centers around the world. Nvidia has been nearly alone on the field with more than 90% market share. But fresh competition is coming from companies big and small, and the battle will be fierce. The stakes couldn't be bigger. Lisa Su, the CEO of AMD, has sized the AI chip market at $400 billion by 2027. Intel CEO Pat Gelsinger has projected a $1 trillion opportunity by 2030. That's almost twice the size of the entire chip industry in 2023. Nvidia's Jensen Huang has built a company that is universally respected and admired, but chip buyers aren't keen on relying on a single source. Cloud providers like Amazon and Google want more options so badly that they are designing their own chips. And companies that rely on AI-based systems want more computing resources at more manageable costs than they can get now. Nvidia's success is now an opportunity for everyone else. It's hard to find a product of any variety that has had more impact on the financial markets so quickly than the Nvidia Hopper H100 GPU. Nvidia's revenue growth has actually outpaced the stock gains. For its fourth quarter ended on January 28th, Nvidia posted revenue of $22.1 billion, up 265% from a year earlier. The company's data center revenue was up 409%. A few weeks ago, Nvidia launched its latest marvel, the Blackwell B200 GPU, which CEO Huang says dramatically 30x outperforms the H100. With Blackwell, Nvidia raises the bar for its rivals. Nvidia, for the foreseeable future, will sell as many Blackwells as it can make. Jensen said Blackwell GPUs will cost $30,000 to $40,000 a piece, but the chip prices aren't the whole story. AI customers want to run workloads in the shortest time, at the lowest cost, with the highest accuracy and reliability, drawing as little power as possible. There are a number of companies that think they can do that as well, or better than Nvidia.
Is a chip that can run programs like Meta's Llama 2 model, for example, faster than anything else in the world. 10 to 100 times faster. What makes Grok chip LPU different from other AI chips?
Let me know what you think in the comment section below. Nvidia's rivals fall into three groups: big chip makers, cloud computing, vendors, and venture-backed startups. With $1 trillion market at stake, this won't be winner take all. It isn't game over, it's game on. Nvidia's most obvious challengers are Advanced Micro Devices and Intel. AMD shares have rallied 71% over the past 12 months, aided by the market's perception that its new M1 300 GPUs will chip away at Nvidia's stranglehold on the market. That hope is inspired by AMD's success at stealing market shares from Intel in the PC and servers. AMD is really the only other company on the field. AMD chips outperform Nvidia's H100 for many inference workloads, while offering parity for model training. But AMD's other asset is that it isn't Nvidia. For the very large users, they are not going to bet their entire franchise on one supplier.
My second job was AMD, by the way. Loved my job there. I did. I loved it. It's a great company.
There is an extreme desire for market alternatives. AMD CEO Lisa Su said on the company's most recent earnings call that she now expects 2024 GPU revenue of $3.5 billion, up from forecast of $2 billion a quarter earlier. That's more than the entire revenue that ARM generated in 2023. That's why I will add more AMD stock. The charts actually predicted that this would happen. A very obvious one is AMD. From the AMD chart, you can see the head and shoulders pattern forming with the head at the peak of 220. We have the shoulders at 175 levels. If the pattern plays out, the price could reach 125. Just by looking at the ARM stock chart, we can predict this 10% drop from Nvidia was coming because we know ARM is a new IPO stock, and that means hype money. It jumped from last Nvidia's earnings. Now they are scared of the unknown, so they sold. Intel is oversold because their revenue has been declining for 2 years straight. In fact, other than Nvidia, most chip stocks are on the edge of revenue decline. Intel is coming from behind, and the stock has struggled for years, but the company opened eyes this month with the launch of Gaudi 3, its third generation AI accelerator chips for training and inference. Intel contends that Gaudi 3 is faster than Nvidia's H100 for both AI tasks, while using less power, and that Gaudi 3 will be competitive with Blackwell. Intel said it had become the first company to assemble one of the ASML's new high-NA EUV lithography instruments. Intel plans to use the instrument, which is the size of a double-decker bus, to make new generations of smaller, faster chips. This is the reason why I now own Intel stock. Intel, which is now spending billions to build out chip fabs in Arizona and Ohio, should be advantaged over the long run by having its own source of supply in a market with a severe supply shortage. But not yet. Gaudi 3 will be produced by TSMC, just like AI chips from Nvidia and AMD. Then there's Qualcomm. They made an AI inference chip it calls the Cloud AI 100. Qualcomm ultimately thinks over time more inference workloads will be handled on edge devices. The theory is that it's cheaper and more data safe to stay out of the cloud. Amazon, Alphabet, Meta Platforms, and Microsoft All four are designing proprietary chips for both their own internal needs and to serve cloud customers. The competitive story here is less direct. None of the cloud leaders sell chips to the third parties, but there's still a threat to Nvidia. The hyperscalers together are spending a fortune on AI infrastructure. Those four are expected to have combined fiscal 2024 capital spending of $178 billion, up more than 26% from a year earlier. Microsoft alone will see capex increase 53% this year. Spending will jump 31% at Alphabet and 26% at Meta. All four are building chips in part to gain better control of their spending. Nvidia is in its pre-earnings quiet period, but Yang did address the question of competition in the recent past. So this AI chip stock crash that we just witnessed is because number one, the chart or the investor sentiment, Netflix got dumped heavy with the good earnings beats. Number two, competition fear. Maybe there are better solutions than GPUs. We have more competition than anyone on the planet. Yang said at the March event at the Stanford Institute for Economic Policy, not only do we have competition from our competitors, we have competition from our customers. His view is that high levels of integration and efficiency built into Nvidia's system make it tough for rivals to keep up. Yang has said that the company's total cost of operation is so good that even when the competitors' chips are free, it's not cheap enough. That hasn't stopped big tech from trying, and they're being joined by a host of venture-backed startups. Some of those startups are hoping to sell chips and systems to server and cloud providers, but most of them are trying to disrupt the market by offering cloud-based services directly to customers.
You're saying that one of those is equivalent to an Nvidia H100.
The most intriguing of the group might be Cerebras Systems, which reportedly is planning a 2024 IPO. In March, Cerebras unveiled its largest chip to date, the wafer scale engine 3 at 72 square inches. It's the largest commercial chip ever made. The H100, by contrast, is roughly 1 square inch. Rather than trying to network lots of chips together, an engineering challenge, Cerebras is simple packing all of the power onto a gargantuan semiconductor, which it says can train a large language model like Meta's Llama in 1 day versus 1 month. For Nvidia's base platform, Jonathan Ross, who played an important role in developing Google's AI chips, is now running an AI chip startup called Grok.
It means to understand something deeply and with empathy.
Like Cerebras, Grok's strategy is to sell compute time on a consumption basis rather than selling chips to hardware and cloud companies. Ross says Grok can run popular models like Meta's Llama 270B at 10 times the speed of Nvidia's base systems. After Nvidia's Yang unveiled Blackwell a few weeks ago, Grok cheekily issued a press release that simply said, "Still faster." Samba Nova, which has raised $1.1 billion from venture investors, is another company taking a systems-based approach to serving the AI market. Rain AI is focused specifically on energy efficiency and running large language models on edge devices. Light Matter is using photonics, light-based technology originally built for quantum computing applications, to improve the speed of networking in AI data centers. To be sure, these startups have big ideas, but they're still operating at a small scale. They are private, so Wall Street money can't go in them, so Nvidia stock is still the king. You like my chip necklace? Supercomputing chip? Oh, yeah, he says. Oh, you like it, Ted? Oh, Ted, don't get too close. Ted, what are you doing?
We've talked to so many different AI companies recently. There's a lot of overlap. Like I said, you're not the first one who said we have a chip that's going to compete with Nvidia's or offer, a good substitute. There's also a lot of generative AI companies that will do your marketing for you.
Right.
Do you think we're in a bubble?
There's a lot of excitement out there. You see the winners, companies like Nvidia, who are a trillion-dollar company really supporting this market. And yet you go and talk to the Global 2000. You talk to the CEOs, CIOs, and you ask them, what % of your daily workflow is on AI? Just getting started. And as we know, enterprise powers the global economy. And so I think AI is just getting started.